Hello, Business Finance 330. This is Professor Hassey, and today's date is Tuesday, July 26, 2022, and this is our Week 8 lecture video that includes our final examination. We will also have available for a review session for any students who have any questions or concerns this Wednesday, July 27th, at 5:30 in the afternoon via Zoom. I will also record that review session. Now, this Wednesday session is usually when I meet with the remote business finance students, but the online class can also come to this review session if you'd like to and have any questions and ask and be available to go over any questions or any problems you have, Wednesday, July 27th at 5:30. And I will include a link to that session in my email introducing this lecture video. So let's see where we stand here in this class, and I appreciate all your patience and working with me. We will and have covered all the material of our course. I have been flying back and forth for the last month to Michigan and taking care of some ill parents. That I am the oldest child in the family, and the responsibility comes on me. So you guys have bared the bad times of all this, but I think we've worked out fine. We've covered all our material, and we're going to summarize it all in this final examination. I want to do two things today in this video: is to review very briefly assignment number 3. Those grades have been posted, and I want to just go over through that because that is a very important part of this class, the capital budget analysis, in which many of you did well, but some of us had a little bit of difficulty. So I'm going to review that because there are some questions concerning capital budget analysis on the final examination. And then I will review the outline of the final examination, what it's covering. And then that'll lead into the review session tomorrow evening if any of you have specific questions. So where we stand right now in this class, this is the last week. The final examination is due on July 31st, Sunday. If you need more time, there are extension days available through August 2nd. So through Tuesday, August 2nd, I have to have the grades in around the 3rd of August so they can be posted. Also, you should all, or some of you, I don't know if the remote students got it because there's not too many of them, but there is, for the online class, you should have gotten an email from the course evaluation institutional research folks. So I would appreciate if you can do that evaluation after you complete the examination work, and then that'll lead us into the posting of our work for this year. Here is the final examination file folder. All the work can be done on the examination. If you need a spreadsheet, the only spreadsheet you are required to do is your portfolio update as of this Friday, July 29th, and I'll explain that in a minute. So you could do your work on the Word doc file and even the PDF file for some of you. But make sure you don't forget to do your portfolio evaluation on a spreadsheet. Continue that process because that will be a very important part of your grade for this examination, and also it determines our Wolf of Wall Street. First of all, let's take a look at assignment 3. Okay, the assignment number 3 was designed for you to take some variables from a company and determine the net project cash flow, and then do the return analysis using net present value to determine the return in dollars, internal rate of return, profitability index, and the payback in years. And so this is what I was looking for. I was looking for a spreadsheet just like this, where you, in 1 or 2 words after you get done with this analysis, is this a project a go or a no-go? And as far as approving of its financial viability. So as you can see, it's a $750,000 investment over a 5-year life with a salvage value of $25,000 in year 5. The sales are based on 40,000 units sold at $40 a unit, with an inflation adjustment of 4% after the first year. So that means $1.6 million is our first year revenue, and that increases by 4% every year to a total of $8,666,000. Our variable costs, or our first expense, is based on the output of units sold of 40,000 units times a variable cost rate of $30 per unit, also adjusted after year one for an inflation rate of 4%. Pretty low for these times that we're in today. So that's $1.2 million variable expenses, increasing by 4% every year through year 5, a total of approximately $6.5 million of variable expense. Our fixed costs are $175,000. Those are not tied to output as units, but it's still a flat amount of $175,000, and it still inflates at 4% after year one. Even though fixed costs are not tied to output, fixed costs do go up. Management salaries, rent, overhead, those all increase, and they're increasing by 4% over the next 4 years, a total of $948,000 of fixed expenses. We're depreciating this $750,000 investment straight line over 5 years. That's $150,000. Our earnings before taxes are roughly around $468,000, of which now we take 22% as our tax to determine our net accounting income of roughly $365,000. That's our net accounting income. To that, we have to add or subtract a variety of other cash-related items. First such is our salvage value. Salvage value is $25,000, but we have fully depreciated the asset over its life to a zero value accounting-wise at the end of its life. So that means that $25,000 is a taxable gain on the salvage or disposal of the asset, of which we have to pay 22%. So I took 25,000 times 1 minus 22%, and that's our after-tax cash flow in year 5 of salvage of the $750,000 investment to $19,500. We add back the depreciation as additional project cash flows because depreciation is a non-cash expense. And then we adjust for the 10% working capital. Working capital, remember from our analysis a couple weeks ago, is those additional cash flows result from the maintenance or for the maintenance of the asset that you're purchasing. So it's 10% of the next year's sales is our base. So in year 0, we're going to need $160,000 of additional cash to get this investment off the ground. Then as our revenues change, so does our working capital base changes by that 10% of the delta between the 2 years. So at the end of year 1, we have $166,400 of working capital base, which is 10% of year 2 sales. That base stays at that 10% level until year 5, when the project has no year 6 revenue. So the project is over. Working capital has now been fully reimbursed by the sales and collections of cash over the life of the project. We add back in 10% of year 5 sales, and we get a delta of 0 over the course of the 5 years of working capital, but we're showing the cash going out and then finally the cash coming back in as the project is over. Taking all that into account, we have a $910,000 investment in assets supplemented by $1.295 million of project cash flow to be received into the next 5 years. To compare our analysis in today, year 0, we discount those future cash flows at the cost of capital given in the problem at 9%. That's $975,265, meaning a net project cash flow, the difference between discounted cash flow and the investment of $65,265. Internal rate of return is what this is in a percentage over from year 0 to year 5. That's 11.41% return. What this is in profitability index, the discounted cash flow as a ratio to the investment, 1.07 times greater. And the payback, how many years does it take us to pay back the $910,000? 1, 2, 3, 4.13 years. Because the project is profitable, not much. If I was the manager of this company, I would try to make sure we have a little bit more, but it is considered a go as an investment, and that's the final answer in this problem. 100 points for that problem. If you miss, especially if you miss working capital, you're going to lose 10 points, especially if you miss the inflation rate, you might lose about 5 points. So check your work for the red highlights on your work, and you can see what you missed and note for future considerations in the final examination. But the good thing about the final is you don't have to do any more spreadsheets. You just have to answer some questions concerning this type of analysis. You will be using this again in your studies in your business administration program, most notably in your 495 or capstone class. This work will be done again. And the extra credit for additional 20 points of extra credit, true, false, true, true, false, fixed and variable costs, and the break-even analysis. Part A is 5,000 units is the break-even, and in dollars, that's $500,000. You get all these right, you get an additional 20 points to the work in this problem. And that was a good buffer, not bad choice of word. That was a good extra credit because it made your grades excellent, and it helped a lot of us out in our overall cumulative grade point average. Speaking of cumulative grade point average, make sure this week you check where you stand in this course. Some of us have not posted some work. Some of us have not, maybe have some questions about the work that has been posted and graded. Make sure you review that and let me know if you have any difficulties. Remember, I'm wrapping up the course on August 3rd. So if you have any questions or concerns with how I have graded or what you have missed, and maybe you can get that work to me this last week, please let me know via email or through our Zoom sessions or the discussion forum in Blackboard. Okay, well, let's take a look at the final examination, and it is designed basically for the latter half of our course, but there is some questions concerning the overall definition of finance that we've talked about throughout the summer. The first part is short answers, so you can answer these right on the Word doc file, or if you want to create another file to do your answers, that's fine. Just make sure your name is on all files that you submit to Blackboard. So short answers, just meaning 1 or 2 sentences to answer the questions. Here's a little bit of a calculation problem. Question 6 goes back to our financial analysis study. Mars Company had net sales of 18 million. Next year, the company's management expects a 15% increase in sales. If cost of goods sold is 6%, 60% of sales, and inventory is 25% of sales, what would you estimate sales, inventory, and cost of goods sold to be next year? 18 million in sales, increasing by 15%. How does that affect the new cost of goods and inventory number? Great question. Identify the advantage, disadvantage, or N not applicable of the characteristics of a business organization. Name and explain the different methods the corporation can distribute return to the stockholders. Not only just cash dividends, but other types of distributions. Here's a great question from chapter 19. Create the statement of sources and uses. In other words, which of these 8 things, is a source, meaning cash coming into the business, or a use, cash going out of the business. Tell me what are these sources and uses? If you want to earn some extra credit points, tell me the net of this, the net of sources, net of uses. What's the bottom line? If you do that, I'll give you some extra credit points. So what are sources of cash in this list and what are uses of cash? Got to think about that a little bit. Then we have some true false questions about capital analysis, what we just talked about in assignment 3. So true and false in regards to assignment 3. Then we have some additional questions in that regard. So 10 true and false in regards to the work in chapter and assignment 3. Then part 3 is to update your spreadsheet of your portfolio. So you should basically have in that spreadsheet your original valuation, which I believe started on June 10th. I make sure I'm double checking that right now with my work. June 10th, yes, you have June 10th, and I don't really care about the subsequent activity during the course of the year when I ask you to evaluate, as long as you have June 10th and July 29th. And tell me how your file or your firms in your portfolio changed from June 10th to July 29th. Also tell me, if you can, what dividends were paid by your companies from that period, June 10th, July 29th. You can go into Yahoo, into historical numbers or the drawdown file historical information, and you can see the change of price by daily of the stock, but also see when or if the company paid a dividend during that period of time. The key things for the analysis is I want to know how your portfolio has changed in dollars and in a percent over the course of our class. Also compare that to the Dow, the S&P, and the NASDAQ indexes from June 10th to July 29th, and how those index has changed percentage-wise. I believe in the last time we did this, I gave you a sample spreadsheet and posted that to Blackboard, and you can use that sample if you had some confusion, especially if you had the wrong index values in the market as of June 10th. Make sure that is the correct number, or you'll lose some points in your posting of this work. And finally, 1 or 2 words, did you beat the markets in your portfolio for the summer? That's part 3. And finally, part 4, which is some multiple choice from the last couple of chapters of our class. Information is provided in Blackboard. Financial risk refers to multiple choice. A dividend will be paid to shareholders on Friday, August 7th. To receive this dividend, you must purchase stock by no later than, that's chapter 17. And true false from chapter 18, financial planning. Each one of these has an answer, true or false. So we finished through chapter 19, and that completes our business finance class. You guys have done a great job. Let's wrap it up with this final examination, do good work, and get some good grades as you complete this course. Remember, course evaluations are due by August 2nd. Again, your course grade is not determined on whether you complete the evaluation or not. It's just good feedback for me, please. It means nothing to your grade. If you don't do it, it means absolutely nothing. It's just when you work at your employer or you get some feedback from a variety of different companies about their products, it helps the companies, it helps your employer do better work by knowing the efficiency of the course, the efficiency of the program. And please feel free to give me your feedback. It's anonymous. I don't know what it is or who said it, but it's very helpful in the planning of future classes and makes our overall business administration program better. It helps. Okay, that's our final examination. In our review session on Wednesday, I will talk a little bit more detail about chapters 18 and 19. And I will record that and make it available, but you're on your own to review that from our Blackboard. I want to thank you all, and I'll send one last email to one last video to you tomorrow after tomorrow evening. But I appreciate all your hard work and your patience in dealing with my family issues, and I want to wish you the best rest of the summer. Remember, call on me for any recommendations about this course, that you took the course, how you did, a recommendation letter for future use for your employment or for future academic study. Having a recommendation letter from your professor is good for your own personnel file. And having that can be very handy down the road. Be more than happy to do that for you. Some of you I know are going to be continuing on in some other classes into the fall, and some of you, this is the final chapter in your relationship with me, which in this class. But it's been a pleasure. I hope I get to see each one of you individually or talk with you either via Zoom or through email down the road. But again, thank you very much for all your hard work. It's been a pleasure, but I'll talk to you again tomorrow evening. Thanks, everybody. Adios.